Hi everybody and welcome. I'm Terry Ryder of hotspotting.com.au and today I'm speaking with buyer's agent Alex Dutt from Adviseable on a subject that's perfectly aligned with the times we're in. Our subject is a buyer's agent's practical tips on successfully purchasing in a hyperactive market. Now, hyperactive is certainly an appropriate word to describe the current housing market. In other words, I'm hearing frequently are extraordinary, frenetic, and frenzied. And every time we get the latest price data, the growth numbers become more and more exceptional. And we've just seen the median price growth for all the major markets in the first 6 months of the year. Cities and regional markets up 10%, 15%, 20%. Growth that would be exceptional if this was for 12 months, but this is just for the first half of the year. So now more than ever, I think buyers need the help of a great buyer's agent to deal with this hyperactive market. And my guest today is one of the best, Alex Dutt from Adviseable. Alex, welcome.
Thanks, Terry. I guess today I just wanted to talk people through some practical tips as to how they can buy in such an active market. But I also wanted to explain what we do day to day, but I didn't want to make it a shameless plug about, being a buyer's agent and using a buyer's agent, but hopefully you can at least appreciate, why we exist and how we can help you.
Yeah, well, I think, as I said in my introduction, it's in times like these more than ever. I mean, it's just so hard for ordinary investors to just deal with the market conditions with things selling so quickly. There's so much competition. People want to be able to buy sensibly and safely, do their due diligence, but it's a little bit hard to figure out how you do that in a market like this. That's where you come in, I think.
Yeah, absolutely. So I might kick off the presentation on that note. So bear with me for a second to do that. So as Terry mentioned, I'm going to give you some practical tips. There we go. So, okay, sorry about that. So first things first, a bit of a disclaimer. So the information that I'm going to give you today is general in nature. It's not personal financial advice. So we urge you to consult with your professional of choice before making any decisions. So that's a bit of keeping that disclaimer out of the way. So what we're going to cover today is, first and foremost, why you're listening to me. So what does a buyer's agent actually do? And again, that's not just about me trying to sell you to use a buyer's agent. It's more about a bit of context as to what we do and some of the skills that we have and some of the practical tips that might help you if you're looking to do this. We're going to look at a few client purchase case studies. I think that's really important, and Terry touched on this earlier, which is that there's been such significant growth even in the last 6 months, looking at, and even going back 12 months, even kind of during the initial stages of COVID, the lockdown, how that has impacted growth, and looking at a couple of examples there. And that leads us to the next, question, which is weighing up whether the time is right to buy now. And I get asked this all the time because people come to me and say, I hear what you're saying, and I've heard that it's really rough out there, as Terry's kind of touched on. It's difficult to actually find something, let alone grab a hold of it and buy it and be successful with negotiation. So I do get asked a lot, well, does that indicate that it's, is it the best time to buy, and is it a good time? So we're going to explore that. I'm also going to go through some of the kind of common mistakes that I see buyers making in very competitive markets. And again, as Terry said, it is a very competitive market out there, or markets out there, I should say. It's very active, but it's also very diverse. So, I mean, I'm doing a number of different purchases, and I've done a number of different purchases over the last months in very different areas. And, it is very different in nature how that works. It's all relative. And I'm going to go through a bit of a checklist to tick off before, you as a buyer inspect even your first property. And most importantly, how to get yourself in front of the buyer queue and get a deal done, really active, frenzied buying conditions. I mean, Terry used some really good adjectives there to explain, describe the market at the moment. Most importantly, without overpaying. and then some Q&A along the way. So this is my best case scenario, that we get through all these slides. There's not a huge amount, but I like to think that there's a lot of practical information. So I'm aiming to get through them all within an hour. But by all means, if anyone's got any questions along the way, feel free to jump in.
Yeah, and please, people, if you do have questions or comments, if you could put them in either the Q&A panel or the chat box, either will do. They'll come up and we'll see them, and we'll deal with them as Alex goes through his presentation, or at the end of the presentation in the last, say, 15 minutes of the 1 hour broadcast.
Thanks, Terry. And a quick introduction as to who we are. So some of you might have seen my colleague Kate Hill on YouTube. She's gone viral on YouTube with her channel, which is really great. But we are property investment advisors, we're buyers agents, and we're development consultants. So we help people with residential developments as well. But we're predominantly doing property investment advising and acting as a buyer's agent. So we give advice on where to buy and what to buy and help people through that process. We do not sell real estate, so we're buyer's agents. And we've been doing it for many years, and we've helped investors buy and owner occupiers buy hundreds and hundreds of properties. So I've been in the industry this is my 15th year, so I've been doing it quite a while. And we've mostly been buying, even though we're Sydney based, we're buying in New South Wales, around New South Wales, Victoria, Queensland, South Australia and WA. So they're our main areas of focus for purchases. And we're members of the Property Investment Professionals of Australia, the Buyers Agents Association of Australia, and the Real Estate Institute of New South Wales, and we're all QPAA and fully licensed. So quick spiel about who we are. And again, I thought I'd go through what exactly a buyer's agent does. And again, I'm trying very hard not to make this just a shameless pitch about, to use a buyer's agent, but it's more about a bit of context and why you might choose to listen to me, I guess. Terry, do you have anything before I get started in that, and any kind of commentary around buyer's agents?
Look, I just think buyer's agents are a great value for money. I often write for Money Magazine, and from time to time I'm asked to contribute to a little panel. They say, if you had a spare $10,000, how would you invest it right now? The last time I was asked to do that, my answer was I'd invest it in to engage a buyer's agent to find me my next investment property, because I think that'd be a wonderful way to spend a smallish sum of money. Because I think that no matter who you are and how much knowledge you have, you can make an argument for using a buyer's agent just as a time saver, if nothing else. I mean, I certainly have plenty of knowledge, but I don't have a lot of time to do the process of searching for a good property well. And that's where I think someone like yourself comes in with your skills and contacts across the country, and be able to help all sorts of property investors save time and get a good outcome. Perfect.
Thanks, Terry. That's spot on. So again, I'll go through what a buyer's agent does, and this is what I do, and our team does, I should say. So we, as a buyer's agent, we hold a full real estate license. In New South Wales, that's now a Class 1 license. So I hold a Class 1 license, I should say. And the buyer's agent model it's entirely fee for service. So we get paid by our buyers and we represent our buyers. And we do not, as I mentioned before, we don't sell property. So we don't represent any third-party vendors. So we're entirely independent. We are paid by our clients and we work for our clients and our clients alone. So it's simple as that. Our job is to basically get the best results for our clients. We follow a code of conduct to represent those clients. So as opposed to a selling agent who represents their sellers. And we give tailored advice on, as I mentioned before, where to buy, what to buy, how to buy it. So in a nutshell, we're being paid by our clients to help them make money in real estate, simple as that. So we do, even though I guess you could argue that we're kind of opposing forces to a selling agent, we do work very closely with them because they have access to listings. So a lot of our relationships that we have as buyers agents is with selling agents to get access to those listings that they have. And that's an important skill set that that you should use even if you weren't using a buyer's agent. So really be plugged into working with selling agents and getting access to listings. So as buyer's agents, obviously we're working with selling agents en masse. So we have volume, so we're getting access to off-market and pre-market opportunities, but there's nothing to stop you as an individual accessing those as well, if you know how to get your foot in the door and you know the right things to say. So again, not just about using a buyer's agent, which, I mean, I'd love you to use a buyer's agent. I'd love everyone to use a buyer's agent, hopefully me, of course, but for our team. But at the end of the day, there are a lot of skills that I can show you that you can use yourself. And that's what this is about.
Alex, I imagine right now it's really hard for individual investors to actually get any attention from selling agents, let alone establish a relationship with them by giving them your requirements and give us a call if something that fits my criteria come up.
Yeah.
Agents are selling property so quickly and easily in so many parts of Australia that it would be very hard for inexperienced operators to be able to establish those sorts of relationships that you need.
It is tricky. You're right. I do think it's achievable, but it's going to be that much harder. But again, I'll kind of talk about that later. And again, I don't just want this to be a shameless pitch about using a buyer's agent, but it is trickier, but it can be done. But I mean, I had a chat actually with a client yesterday, potential client yesterday, and she was saying that she's just having difficulty getting agents, you know, in South Australia just to return a call point blank, you know, and that's not uncommon. So, I mean, and, you know, you keep in mind, you could be one of, I remember we looked at a purchase in Geelong and there were 200 inquiries on that purchase. This was going back a few months, and it actually led us to move away from the Geelong market at the time. So we pretty much decided to move on based on the volume and inquiry and lack of listings and just the competition. So it can be really tricky, but again, it can be done. But I've mentioned there off-market and pre-market because although we are seeing off-market listings, I mean, the market's red hot, and you might be asking, why would someone sell a property off-market? And I'll kind of get into that later. But what we're seeing more often than not is pre-market opportunities. So that's where we might be talking to an agent and they tell us about something that's coming up. So maybe even the photos haven't been taken, so the marketing listing photos haven't been taken, but we can get access to that and have a look at it from our end and maybe get an early inspection ahead of the market. And that's very, very helpful, because if something's, you know, in a lot of cases, we'll see a listing that comes online on Wednesday. By Saturday, it's under contract. You know, first open on Saturday morning and then it's under contract. So that's very common. But we also, as buyer's agent, we carry out the inspection and due diligence process. So we will look at the property, inspect it, and then know all the questions to ask to make sure it stacks up. And then we negotiate. Obviously, that's a really important part of what we do. So negotiate and then tend auctions to buy the property, secure the property. And then the team, and I keep saying me, but there's a team behind me. But we project manage, so from all the way from contract signing through to building and pest, get the contract exchanged. So everything to do with finding the property, telling you, giving advice on where to buy, and then helping you actually do it. So I thought on that note, I'd walk you through a bit of a case study, one that we helped a client buy. This one was in Penrith LGA, which is in Sydney, it's about 40 kilometres west of Sydney CBD. It's given a lot of the transport infrastructure in Sydney. So I'm about 2 kilometres from the CBD where I live. I can get out to Penrith with the new expressways within 35 minutes. And that's driving at the speed limit. So that's pretty amazing. And Penrith, for those of you that don't know, it's between, the Sydney CBD and the foothills of the Blue Mountains. So it's landlocked of sorts, but it's an amazing growth corridor. Do you have any kind of comments on Penrith, Terry?
Other than the fact that I think it's a good place and one that should be considered for its own intrinsic values, but also because it's an integral part of the greater Western Sydney economy, which is one of the nation's top growth economies, and where there's probably more infrastructure spending targeted on that small part of Australia than anywhere else in the country. And infrastructure spending is such a major generator of growth in residential property markets. And I think everything that's happening in Western Sydney, local government areas to focus on would include Penrith as well as perhaps Blacktown as major beneficiaries of that.
Yeah.
Really amazed to hear that you can get there in 35 minutes, Alex.
Yeah, it does. I have to say it costs me a little bit in tolls, but it's still amazing, the time frame. And I would say that's without traffic, of course, and I'm actually going out to inspect a property there this afternoon, and assuming I don't do it in peak, it might be a little bit different on the way back, but it is still pretty amazing the difference that that's that infrastructure that you talked about. But you are neighbouring Blacktown LGA as well, which is what you mentioned there. This one in particular was a house. As you can see, it's 2 properties. It's still on one title, but it was a house with a granny flat at the back. And I bought this for a client looking to buy within her SMSF. So 4-bed, 2-bath at the front, and then a 2-bed, 1-bath granny flat. It's fully compliant granny flat. So it has a CDC, which is a compliant development certificate, which is what we want. And 750 square metre block. Brick and tiled roof for the main house, and then a clad and tiled roof for the granny flat. 1990s build for the house, and then a 2011 build for the granny flat. So I bought that in December for $845 for my client. And the reason I'm looking at this it's obviously we're in July, so it's a slightly older purchase, but I just wanted to talk you through the growth that we've seen. So conservatively, I would say very conservatively, the property's worth $925. So they've already seen within 6 months some pretty significant growth. But one of the reasons that we really targeted this area beyond all obviously the growth, this top property style had a very good rent return. So we're able to get a combined rent return of $920. And that was, when we bought it, it was an owner-occupier property. So it was one family living in both dwellings. And so it was totally untenanted. So we went to the market to get those tenants, and we got $570 for the main dwelling and $350 for the granny flat. So a combined rent of $920. So that's not a bad result, I think, for 6 months worth of exposure to the market.
That's almost 6% rental return for Greater Sydney. That's pretty special, isn't it?
It's pretty amazing when you consider it's interesting in particular what's going on there with the rents, because again, as I mentioned, I live in the inner city, and the rent returns in the inner city are significantly cheaper compared to the outskirts where a lot of the essential workers are. So it's quite amazing the disparity between the two rental markets. So yeah, I mean it's. A lot of people say that, Sydney and Melbourne, typically you're going to get pretty poor rent returns, and that's why people move towards other capital cities and regional cities such as, Adelaide, Brisbane, and other regional centres where there's very strong rent returns. And look, by all means, we're buying there as well. But I think that there's an argument to think outside the square with, if you're going to buy in a capital city that has a suggested low rent return, that you can think outside the square and actually be creative and get a good return. We're also helping clients buy these where we can add a granny flat themselves as well. So, things that you can do to pump up your investment. But again, I mean, I would say that this is not going to work in every market. So there are certain areas where you just would not build a granny flat. It just doesn't fit the demographic, and I'll get into that. So this is basically just a few photos of the home. At the top there on the right, you've got the inside of the main house, and then bottom right, that's the inside of the granny flat. You can see there what it looks like, and the floor plan at the bottom there. So 2-bed, 1-bath granny flat, 60 square metres in Penrith LGA we can build. And as I mentioned, $350 a week in rent, which is interesting because you're getting $350 a week in rent for a granny flat in Penrith. But if you were to, rent out an apartment in the, inner west of Sydney, for example, you'd probably rent it for, 1-bedroom apartment, which would be a similar size. You'd probably get $500 a week in rent. So you typically think that that's blue chip and you'd get a much stronger rent, but it's, it's not necessarily the case.
I think a key factor here, Alex, is that whilst the media publishes generalised figures, the vacancy rate for Sydney is currently about 3%. It sounds high, but of course there's so many different situations across the Greater Sydney area, and out of Penrith, I think vacancy rates are much, much lower.
Yeah, totally. So, I mean, and that's indicative of the return that you're getting. So it's,
Yeah.
again, it's the down, the drawback or the risk of making generalizations and, not kind of drilling down further. So that was that one. Another one that I bought, this one I actually purchased this one right at the start of lockdown last year. And I'll explain why I've used these slightly older examples. But we bought this one. It was interesting because a couple of clients, repeat clients that I was working with, and we decided that we were going to buy in the sunny coast, and we were all locked and loaded, and then COVID hit. And I had at that time a handful of buyers that were investor buyers that we were looking for. And, when COVID hit, I'm not going to lie and say I knew exactly what was going to happen. It was, a situation that none of us had experienced, or myself, I'd never lived through anything like that, of course. And then, I was asking my buyers, and it was totally understandable, do you want to have a wait and see approach? And for the most part, I'd say for those that could, just decided to forge ahead to their credit. And this was one example. And it created some pretty interesting buying conditions in the first month or two of COVID because people were panicking. And this was one example. So we bought this one. And sunny coast, for those of you who don't know, I know, Terry, you love the sunny coast. But I mean, we bought this one 4-bed, 2-bath, double-up garage home, 519 square metre block, brick and tile, 2008 build. So we bought it for $510,000 at the time. And I'd say it's worth easily $620 now. So they've seen significant growth, just since April last year of $110,000.
Yeah.
And it was leased at the time for $520. But again, I'm using this example for a reason, which I'll cover off on the next slide. Before we get into that, do you have any comments around the sunny coast, Terry? I'm sure you do.
I'd say that your clients who bought that property a year ago will be very, very happy that they did, because there has been not only very strong growth in property values, there's also very strong growth in rentals, because vacancies are almost non-existent. Enormous growth in population, lots of people wanting to come into the Sunshine Coast. The problem the coast has is providing places for all those new people to live, to rent or to buy. So somebody owns a rental property on the Sunshine Coast at the moment is not going to have any problems finding a really good tenant paying a really good rental. And so I think that would be a very happy outcome for your client.
I'm pretty sure they're happy. So yeah, I think that was a really good result. But I guess it leads us to the next question, and that is now the right time to buy? So the two examples, one purchased 6 months ago and the other purchased 14 odd months ago. And again, you're looking at it saying, well, that's great that for those clients, good for them. What about me? So I guess that begs the question of, is now the right time to buy? And the first thing I would like to say is I'd just like to give you a special mention for calling the national property boom last October. I actually remember distinctly you calling me up saying what you're kind of seeing, asking me for a bit of a pulse check to what I was seeing on the ground. And I said, it's very active out there. There's definitely feels like some groundswell. And you said to me explicitly, I think we're going to have a national property boom next year. And I was definitely seeing, very competitive market, very competitive buying conditions, and there was an absolute shortage of listings. So it definitely felt like a competitive market, very active, and I could see the reason why prices would spike. But obviously the media reporting was totally contradicting that idea. So it was really quite a bold claim for you to go out there and say we're going to have a national property boom, because it was totally flying in the face of what everyone else was saying.
Yeah, I think that emphasised the importance of for investors and other consumers to be very, very careful about who they speak to and who they listen to for expert analysis, because so much of what's in the media is sourced from economists who I think are not real estate specialists and a very poor track record of correctly forecasting outcomes with property. And the last 12 months have been a great example of that. Whereas I think what people should be doing is talking to real estate specialist analysts like us, of course, but also to people like yourself and your colleague Kate Hill, who are at the coalface. Often the anecdotal evidence is a precursor to what shows up maybe 3 months later in the data published by people like CoreLogic, but it's people at the coalface like yourself actually know what's going on the ground. That's the sort of people that I think that real estate consumers, investors should be listening to.
Yeah, I mean, a good example of that was, the media was saying, this is kind of too good to be true, I guess, a little bit of groundswell, but, and reporting, doomsday kind of ideas with the forecast for property. But then I remember an open home in Penrith, and first home buyer kind of belt, and we ended up being one of 22 offers on a home. And this would have been November, maybe early December. So the contradiction between what the media was saying and what was actually happening on the ground couldn't be any further apart. So very interesting. But I guess, and as Terry's kind of touched on, there are a lot of, analysts and research houses and specialists, as Terry said, not economists, that are predicting continued price growth for the next 12 months and beyond. So it's not just myself as a buyer's agent saying buy, buy, buy. There are a lot of other people that are saying that we're due to have continued growth. So obviously interest rates is a hot topic as well. So at an all-time low, I mean, it's stating the blinding obvious, but they're low and they continue to stay low for the next few years at least. So some people are saying up until 2024. Others recently have said maybe they'll start to increase 2023. And this is probably the most important thing, because for us, one of our principles and strategies that we employ for our investor clients is to follow the trends of first home buyers. So I think, and Terry will talk about this, I'm sure that, the boom is really being led by owner occupiers, which is what we want, because fundamentally they're the ones that are going to hold the prices steady. And, that's really important that we tap into that market, and it creates an opportunity for us to ride the coattails of owner occupiers. And traditionally, in the price brackets that we're buying, it tends to be first home buyers. But again, that's not slowing down by any stretch. It's maintaining, absolute fever pitch, and just keeps going from strength to strength. So it's continuing that opportunity for us to ride the coattails of them. The other thing is, Terry's mentioned that. So, we've still got, in a lot of markets, falling vacancy rates, creating rising rents, which has increased investor activity. So investors, have returned in the market this year. And I'm sure there are a lot of investors that are listening to this that are, in that very category. So that's going to help price growth. But fundamentally, it's those owner occupiers we want to chase, as mentioned. One anecdote, I guess, with vacancy rates is, we purchased a property for an investor client in Adelaide, for example, a couple of months ago. And before the property was even settled and tenants could go through, there were 16 people that had registered to tenant the property. Even before they had a look, and the property had settled, they were there, they wanted to move in. And in some markets in Adelaide where we've been purchasing, the vacancy rate is actually 0.1%. So technically, it's essentially 1 in every 1,000 properties is up for rent, which is just standard turnover, really. So you can almost say that there's, 0 properties available, on those waiting lists and so on. So it's pretty amazing what's happening with certain rental pockets around the country. The other thing is extreme land shortages as well. So talking to builders, because as I mentioned before, we help some of our clients do development sites and build small scale residential developments. And speaking to builders, they're all saying the same thing, that in the areas where you'd want to buy, where money's to be made, there is some severe shortages in land, which is going to drive prices up for established property. So it's going to force people back to established property. And on that note, a lot of the builders I've spoken to as well have experienced severe raw material shortages due to COVID. So they just haven't been able to get materials. And timber was one example. So again, that's created pressure on construction prices and ability to deliver the end product, which again is going to turn people back to established properties. And look, the reality is, I guess, as a forecast, there's still many COVID-related milestones still to occur. So obviously the vaccination rollout in Australia, and overseas migration and tourism coming back online. And again, that's one of the standard things I'll say. People say, well, should I buy now? And I say, well, we still haven't seen any, overseas migration kick in. So once that's back online and the money starts to flow in, that's going to have a significant impact on the economy. And again, Terry's talked about this a lot, and I'm sure you would have seen this if you read his reports. So the continued shifting population trends that were were very much not just happening due to COVID, but well before COVID. COVID obviously amplified it a little bit with people working from home, but that, what Terry calls the exodus to lifestyle and affordability. And then we talked about as well a lot of key infrastructure projects that are still due to come. I mean, one that springs to mind in Sydney is the second airport, which is twice the size of the existing airport, but no one's talking about it. It's quite it's crazy to me. It's huge, and obviously I can understand to a degree why people aren't talking about it, because no one can use it and go overseas and go on holiday. But at the same time, it's forging ahead, and it's going to create a huge amount of growth in the area, particularly that Western corridor. And there's still, again, plenty of upside that will flow into the community. And there's still many areas that have relative affordability and excellent growth prospects that are sub 500. So there's still plenty of opportunities out there. And the last adage that I'll just kind of throw out there is to, when you're deciding whether to invest, it's not about the moment. It's to obviously you need to be careful what you buy when you buy it, but to think about having a 10-year forecast, not kind of making decisions based on what you read 10 minutes ago. So 10 years, not 10 minutes. Did you have anything to add there, Terry?
Just perhaps to reference a question that's come through from Sandy. You made some reference to parts of Adelaide, very low vacancies, and he's asking whereabouts in Adelaide are you talking about? From our research, I know that pretty much everywhere in Adelaide has got very low vacancies. It's hard to find a postcode anywhere in the Adelaide metropolitan area with a vacancy rate above 1%. Is that what you're finding in your dealings in that market?
Yeah, pretty much. I guess the areas we've been targeting, certain pockets of Onkaparinga, certain pockets of Marion, certain pockets of Salisbury. But that's just a starting point. But those have been traditionally the most active areas for us to purchase in. They're quite diverse, and there's quite a lot of diversity between those pockets in property types, but they're very active. Marion in particular is just, lack of a better word, it's mental in terms of trying to buy a property there. It's very, very active, extremely active. So not for the faint of heart. Is there any other kind of things you wanted to mention there, Terry, about why someone might consider buying now?
Look, I think the reason not to buy now is if the expectation is that it's all going to come to a grinding halt and maybe prices are going to fall. I would say to people that I just don't see that happening at all. I think it's we're in a very rare market. We only get these genuine national property booms in Australia once every, say, 20 years. The last one was certainly about 20 years ago at the early part of this century. And that been rocked on for 3 to 4 years. Having an understanding of the number of different factors that are driving this current upcycle, I believe it's got longevity. It's not going to end anytime soon. So those who wait, those who wait will be paying more 1 year from now. And the market will still be rising, I believe. And I've certainly had conversations with people that I was talking to 12 months ago, and they decided to wait, and they wish very much that they'd bought 12 months ago, because since then prices have moved so much. But I don't think that price growth is going to stop. I think most analysts are now talking at least to the end of next year, and some see it extending further into 2023.
Agreed. Yeah, absolutely. I'll go through this one pretty quickly, but it's just as an example. as I mentioned, I've been doing this for 15 years, and it just feels like every year there's something that someone says to reason why they might not invest. So I'll just go through that pretty quickly. But when I actually started the industry, interest rates were getting really high. So they were inching towards the 9% mark, which seems, for some people that maybe went through the 80s where interest rates were 16 to 18%, maybe they're saying, well, 9% is nothing. But maybe for those in the current situation where interest rates are 2 to 3%, you can understand that 9% was pretty high. But rates were creeping up. 2008, we saw the GFC. 2010, everyone was saying don't invest because we got the abolishment of the first homeowners grant. Then 2013, it was China's economy slowing down. 2016, it was Brexit. 2017, we had a property bubble because we had such rapid price growth, and then we're going to have a bubble. And everyone was saying, when I say everyone, I'm saying, the property investment forums and the media, we're saying we're going to have a looming recession, the doomsayers. And then 2019, the excuse was we've got the federal election with Labor abolishing negative gearing. We've got the Royal Commission into banking misconduct. We've got APRA squeezing lending. So that's going to totally hamstring the market. And then 2020, last year, we had COVID. So they were some of the reasons that people were coming up with, or the counters to investing at the time. But I guess if you'd bought last year and you bought an average house in Melbourne, you would have seen 7% growth. And I'm just saying, this is Melbourne metropolitan area, the average price growth. If you'd bought in 2019, you would have seen 11% growth, and so on and so on. So the point is, obviously you've got to buy very smart, but you're seeing significant growth. It's about time in the market. So what that actually translates to in property prices is, you can see there, you would have paid 400,000 in 2007 for a home. And I used Melbourne as an example because when I first came into the industry, that's what I was helping people buy at the time. We were buying, and we're probably buying in the 200s, to be fair. So the high 200s, we were buying, in some of the growth corridors to the west and southeast of Melbourne. But prices have gone up significantly. So that's just illustrates the point of what the median price has done, coupled with, versus the counters that people had, or the excuses that people had why they shouldn't invest. And I'm not saying just rush in with gay abandon, but I'm just saying, tread carefully. But I'm also saying, let's think about it rationally and what property is due to do over time. So that 10-year cycle, not the 10-minute decision.
Yeah, I mean, there's that old cliche, Alex, about it's not timing the market, it's time in the market. But I think there's truth in that. People who tie themselves in knots trying to pick the right time to buy generally end up missing out on the best time to buy. I think the best time to buy is if you're ready to go, if you've got your finances sorted out and you're ready to buy, then now is a pretty good time to do it. Taking that long-term view. And I think the graphic that you've worked through on the screen right now is a beautiful illustration of that argument.
Yeah, and there's many more. I mean, I actually have done it before. You can go back 20 odd years, and it's even more crazy with the difference. But I've just used it based on my own experience being in the industry, so what I've seen firsthand. And yeah, it's quite interesting. So I picked a good time just incidentally. I mean, I'd been in the industry for a year or two, and then the GFC happened. So that was quite good timing on my account, but I guess I'm still here. So I thought I'd go through some common mistakes that buyers make in inactive markets. So one of the things is, I mean, obviously the media, we're saying don't listen to them, and we gave an example of why listening to them was totally flawed, given what the market was actually doing late last year and onwards. But now they've jumped on the bandwagon and everything's booming. And I guess my one of the mistakes that people make that I see all the time is choosing the wrong area and making the assumption that everything, we've got a so-called national property boom, but again, that doesn't mean that everywhere is okay. So I still think you need to be very, very selective about where to buy. But I think it creates a bit of a false narrative that you've got this safety because everything's booming, that you don't need to be as careful about where you buy. And I think areas that are, heavily reliant on tourism or agricultural resource, it can be tempting, but again, if there's no fundamentals holding them up, then it's a very flawed approach in my experience. But I also think I've put their greenfield fringes in, buying a house and land package in the middle of nowhere, which I've actually had an increasing amount of people come to me and say, look, I want to buy an established property, but someone was showing me this. What do you think? And I'm not saying that house and land is dead set a no. You need to be very, very careful and very, very selective about if you did that. I think the vast majority are not going to work, but I think it's opened the door when it's booming to a lot of spruikers recommending property types that are just not suited for genuine growth. Put it that way. And one of the most dangerous mistakes that I've seen, and this is obviously in an active market, it's amplified in an active market, but it's true in any market, and I see it all the time, is investors buying the wrong property type for the area. So they might have got the area right, and I talk to investors and they ask me where we're buying, and I say, well, they've said, I own a property here, and I say, oh, that's great. We've been buying there for years and it's done very well. I'm sure you've done well. And I ask them what they have bought, excuse me, and they might say, look, I bought a 4-bedroom, 1-bathroom house, or I bought a duplex. And I'm like, you're not going to, that's not the right property type for the sale. I mean, obviously for the resale market. So sometimes, it's not going to be specific or restricted to 1 or 2 property types for an area. But it could be that they've just bought point blank the wrong property type for that area. It just doesn't have the things that the locals need, because when you're buying, you've absolutely got to think about that resale market. You've absolutely got to nail it. And the other mistake I see is, and this probably comes from those Sydney siders or Melbourne siders, looking at the values that have increased of their own backyard and applying the same logic to where they're buying. So everything looks cheaper. And even if you're buying, you're living in a capital city that has done very well, and you're buying into a regional town, everything's going to look cheaper. So it's making sure that you don't overpay. And I'll kind of go into the importance of that as well, and how we can kind of combat that. And the other thing I see is that on that note, people trying to assess market value from out-of-date sold prices. So and I'll touch on this in the next slide, when we're buying, the ability to determine market value is absolutely essential. But it is a skill, but it's all too easy to look at sold prices. And if you looked at a sold price that was even 6 weeks old, so a property that sold 6 weeks ago, that means it's settled 6 weeks ago. So it means that it actually went to contract 12 weeks ago. So you could be looking at a 6 weeks old sale that's actually 3 months old. And in a rapidly moving market, 3 months is a long time. And if you looked at the examples that we talked about before, the client examples, you can see, just how much growth you could have used. So it's really important that you're understanding, what prices are today. And the other thing is just being ill-prepared. So underestimating how much pace you need and how much hustle you need to actually get a deal done. And that might not just be getting a deal done, but actually getting a foot in the door and getting an agent to actually return your call, which sounds funny, but it can be a real struggle. And again, this ties into, the other two, which is, not knowing the market and being unrealistic with negotiation attempts. And this is a funny one. So obviously I've been working with real estate agents for a long time. So, don't get me wrong. I know that real estate agents, can bend the truth. But at the same time, I think that, in a lot of cases, with the agents, the markets are so active, the agents are just so overwhelmed. They're just being totally transparent and candid. There's certain things that they can and can't say for, from a code of conduct point of view. But it's, you might be one of 20 offers. I guess it might be one of 10 offers, it could be less, but it's understanding, the actual lay of the land with agents, and whether, or the market, I should say, and whether agents are being, genuine with their advice. So again, I would say that I'm not saying, listen to everything an agent says as gospel, But I'm just saying, don't be surprised if an agent says to you, we've got 5 offers already, and it's 100% true. And the agent says, I've got 6 offers and 4 of them are above the asking price or above the range. That's very common. And just as one for owner occupiers in a rapidly moving market, I would always suggest that it's messy and it's tricky, but buy before you sell if you can, just so you're not caught out of the market. So I'll go through this quite quickly, but as a checklist, before you get started investing, you're going to need to assemble your professional team. I couldn't help myself. You're going to need a buyer's agent. There's a property I bought in the Northern Beaches for a client. Obviously, you're going to need a finance broker, so you're going to need someone to help you get your loan. You're going to need a conveyancer, solicitor to help you review contracts, building and pest inspector, of course, a property manager if you're renting the property out. And then if you're doing any renovations or construction, you're going to need this professional. So pretty straightforward. You're going to need that at the best of times, but you need to get those people lined up if you're going to have any action in a competitive market. So I'll just go into my kind of comments about what you need to do to get in front of the buyer queue to actually get your foot in the door and get a deal done. So I've talked about a few examples where, we might be, I've probably said it a number of times now, you're 1 of 20 offers or you're 1 of 10 offers. You might get to a point where you're saying, okay, this market segment is a little bit too hot. Maybe I need to start thinking laterally. And we've had a lot of success where we're buying properties in the same market. So we're tapping into being able to ride the coattails of these first home buyers, second home buyers, like I mentioned, but with a slight twist. So we're looking at properties that first home buyers might not be able to quite fund. So in a lot of cases, I'm sure you can appreciate a first home buyer is, they don't have a huge deposit at their disposal. So they've managed to save up their 10% deposit, or maybe even a 5% deposit, or maybe they're getting a bit of help from their folks. And they don't have a lot of money for, renovations and things like that. So if we're able to find a property that is, has really good bones, good block size, good configuration, great location, but just needs a bit of TLC by way of renovation, that'll enable you to get, actually a very good deal, in a very active market. So you're not overpaying. And the other thing, of course, is to look at properties in the neighbouring suburbs. So find out where those really active markets are. And that can be a tricky one, I appreciate, because it feels like, you're going into an area and everything's hot, but looking, a little bit outside the square. But the other thing is also, if you can find, if it's, again, we're buying in a market that's dominated by owner occupiers, if we can find a property that has a lease in place, that'll deter owner-occupier buyers. So, tenanted properties can be real gems, and finding those can be tricky, and that's where we're seeing often off-market deals. So people need to sell, and if they've got a lease in place, they know that the owner-occupiers are going to be deterred. So, we can get a reasonably priced property that absolutely is exactly in line with the local owner-occupier resale market. So we're going to see really good growth, but they won't go near it. So that the purchasing pool is somewhat limited. And my other comment would be to be proactive with the search, and that ties in with what I was saying before with the looking for properties with leases in place, for example. And rather than just waiting for things to pop up on realestate.com or Domain, call up agents. Know exactly what you're looking for. Like I said, know that property type. So know the right property type. I said people get the wrong property type all the time, but know the right property type and ring up the agent and say, hey, I'm ready to go. I want to buy a 3x2 in this location. I've got this amount to spend. I'm ready to go. So just see what you can get there. And I should say, with the pre-market ones, I think I mentioned that before, in a lot of cases, we are getting off-market deals. So as buyer's agents, we get off-market deals. Selling agents do like working with buyer's agents. And off-market deals, you might be saying, well, if the market's, you're 1 of 20 offers, why would someone in their right mind put a property, sell it off-market? And it could be for a variety of reasons. It could be, as I mentioned, the lease. It could be that they're going through a messy personal situation. Divorces are pretty common. So they could just be wanting to quietly and quickly sell. They could be an owner-occupier that point blank just doesn't want 100 people traipsing through their home, and have 5 open homes and staged open homes and an auction campaign and be right in the limelight. They just want to sell it at a reasonable price and move on. Or they could be in a position where they have committed to somewhere elsewhere and they need a reasonable sale and to move on, and they make a commercial decision that way, and it all works out in their favour. So it could be a number of different things, but as I mentioned, we get a lot of opportunities pre-market where it's rather than it's a genuine off-market listing that's going to be sold off-market, it could be that we've got this one coming up, haven't had photos taken, but you guys can come through and have a look at it and tell us if you like it, and then we're putting it on the market next week.
Alex, can we just have a time check? We've got about 10 minutes to go. We've got a lot of questions building up from people, so we
Yep.
If we can keep moving.
Yep, I'm almost there. So the other thing I'd say is to have a very thorough understanding of the offer and acceptance process and the contractual process and know exactly how it works. So, I've done a number of purchases in the last 6 months from, Adelaide to, Western Sydney, even like the northern beaches of Sydney, parts of Brisbane. Every single one of them radically different, even within Sydney, from the west to the northern beaches, radically different in terms of how it works, what the expectation is. So the offer and acceptance process, whether it's going to auction, whether you can put offers pre-auction, whether it's not going to auction, whether you can get a cool off, all those things you need to know about. So that's really important. Ignore list prices. So I would say that, again, I touched on this before, but your number one skill as a property mogul, my number one skill as a buyer's agent, I think, beyond my ability to negotiate and seemingly my ability to talk, is my ability to determine market value. So that's really critical, and I've got a quick summary on how you can hone that. And be prepared and get your contract reviewed early. So get that looked at so you can move quickly with negotiations. And I would say that now's not the time. It sounds obvious, but do not play it cool. And there's no point to lay in the cut and just expect the market to come to you. It's not going to happen. So you need to let the selling agent know you mean business. And I think I see a lot of commentators and people suggesting, well, you should maybe play it a bit cooler and not be the first person that to submit an offer or not buy pre-auction. I think that's you're going to be left in the dust if that happens. The amount of times I've heard from agents that this property is definitely not going to sell before auction, it's a genuine auction campaign, etc., and then lo and behold we're buying it pre-auction, or there's an offer pre-auction that the vendor is willing to accept, or considering. So knowing ahead of the time how you need to play it and just being proactive there. There's no shame in that. If you've armed with what the property's worth, that's not about overpaying. It's about securing the property and indicating to the agent that you want to buy. And on that note, don't be afraid to chase up the agent, or as Sybil from our team says, stalk the agent. So she'll email, call, text an agent. She's got no qualms about doing that, and it's makes all the difference. So as I said, you could be one of 50 groups that, maybe more, that attended an open home. And again, all of this is not just about price. So again, determining market value is important, but negotiation and getting your foot in the door is not just about price. It's about presenting yourself as a committed, genuine, rock solid buyer. So that's how you're going to get to the top of the queue. And that's how using a buyer's agent can help. But it is, okay, we've got a buyer that's genuine. They've got their finance ready. They've got all their ducks in a row. They know how it works. They know the expectations. They know they need to waive their cool off or whatever the situation is, depending on the respective market. And that could get you, into the door and into a contract, irrespective of price. I mean, we've bought a number of properties. It sounds crazy, but we've bought a number of properties where we're not the top offer. We're not the highest offer. I can think back of one just a month ago that Kate bought in South Australia, where she point blank wasn't the highest offer, but given the strength of the terms and conditions, that's what got us over the line. So, and obviously the fact that she had, in typical Kate fashion, you wouldn't expect anything less, all the ducks in a row, ready to go, could move very, very quickly. So that's really important. So quick one, just determining market value. I'll just say a very, very quick one. But what I would say is you need to look at actual genuine sales, not using online marketing tools. This is an old one, but it's a few years old, this example, but it illustrates the point of a property that I bought, and I plugged it into a few online portals that gave me a price. And you can see there that we got quite a significant disparity between, the property price. So, the estimate of what it's actually worth. So in that case, you'd be totally at a loss as to what the property is genuinely worth. So you've got a value up there of over 600,000. I bought it for 500,000. This was 3 years ago. You can see there, March 2018. It's now worth 650. So that investor's done very, very well. But it illustrates the point that if you use those online valuation tools, I don't rate them very highly, to be fair. Sometimes they're okay, but in a lot of cases they're way out of whack. So what you need to do is this, as simple as this: you familiarize yourself with the sold section of realestate.com. I know it sounds really obvious, but this is your best friend as a as a property researcher and investor. I'm going to be quiet now, so I'll take on some questions, Terry.
Okay. We've got quite a few questions. Alfred's asking, I think basically what he's saying, you're based in Sydney. How do you operate effectively in markets around the country as a buyer agent?
Yeah, fair call. So we have affiliates on the ground that we work with. So in the respective area, we get, first and foremost, I will say that any area that we're buying, we visited the area. So we first inspect the area. We see the lay of the land. We talk to locals, research the area, so we know the area very well. We've been buying in a lot of these markets for, as I mentioned, my whole career. So between the buyers agents that are part of Adviseable, a lot of us have lived in the areas as well. Some of us have lived in the areas, so we know the areas very well in the area that we're buying, and then we have affiliates that inspect the properties for us on the ground. So that's how we're able to do that. And obviously we hope we know the market very well and know what to look out for and how to make sure that our buyers are protected, from a contractual process and covered.
Okay, Chris is saying, is it fair to say that the significant number of returning expats have filled a lot of the gap from reduced migration intake since COVID kicked in?
Yeah, I mean, it's interesting because we're getting a lot of inquiry from expats that are looking to actually buy in Australia. So they're looking at what's happened, how Australia's handled COVID, and what's happening in the market. And we work with a number of overseas buyers, and they're quite active at the moment. And obviously, a lot of expats are returning home and will continue to return home. So that's going to have, I think, a continued pressure on housing as well. So for sure, expats are a big consideration.
I think the numbers show that the numbers of Australians coming back as expats exceed the numbers we normally get from overseas migrants. It's not only compensated, it's more overcompensated for the closure of the international borders to migrants in the short term. Yeah. So there's a lot of demand coming to Australian markets from expats returning. Kathy is asking, what are the locations you mentioned where properties are sub 500,000 with high returns and low vacancy rates? Alex, I think it was a general comment that I think you said early in your presentation that there are plenty of markets out there which are sub 500K with high returns and good prospects, and probably too many to mention at the time we have available.
Yeah, I mean, I guess I would say, it sounds shameless, but I would say, read Terry's reports as well, because a lot of them are in Terry's reports. But I would say that the markets that we're looking at, so parts of regional New South Wales, regional Queensland, regional Victoria, pockets of Adelaide, which I mentioned, and Brisbane. So I'd say there, north side of Brisbane, we're really bullish on. So, there's some of the kind of areas that we're looking at, but feel free to, if you want to give me a call, I'll give you my details at the end of the presentation, and you feel free to give me a call and I can talk you through some of those areas, on an individual basis.
Chris is referring to where you're talking about building a great team. He's suggesting that an accountant is also a very important part of your team, especially when you're investing.
Yeah, absolutely. An accountant's critical. I'd say they're kind of in the early phases. So getting an accountant and a financial advisor as well. So that's kind of part of the preliminary strategy team. And then the actual property specific team are those guys that I mentioned. But yeah, absolutely. An accountant's critical. An accountant, if you're investing, of course, you need accountant to give you advice on the ownership structure and then the ongoing, tax effectiveness of the property.
Barney says, Alex, it sounds like you see some benefit in not getting caught up in an extremely hot market when the buyers are competing for a property. I think he was perhaps referencing your comments about Geelong, where you found it so hot you decided to focus on other areas.
Yeah.
And he's asking what measures, indicators would you use to indicate a market is too hot to compete in as a buyer?
Yeah. Great question. So there are a handful of areas that we've actually moved on or have stopped buying. Sunny Coast is one of them actually, because we still love the area. The long-term prospects of the area are fantastic, but there's just an absolute shortage of listings. So it's can be a bit hard to quantify, but we felt that we just weren't seeing value that we once were. I mean, the rental market's still very strong. The prospects are great, but we just weren't finding enough quality listings. So there was just too much competition. Geelong, for example, in the pocket of Geelong that we were buying in, the straw that broke the camel's back, for example, was one property in particular that we were considering for a client. We'd kind of already started to move away, but the client was really keen on Geelong. And the property that we looked at, I still remember, the list price was $470. And it ended up selling for over 600,000. And there was, I think, from memory, there was something like 76 groups through at the open and 200 inquiries on the property. It was just ridiculous. And I mean, that's, pretty blatant, move on. But, I think that it's really following the market and looking at the value. And as I said, even though I said, look, ignore list prices, and a case in point of that example is I'm doing a purchase in the inner west at the moment. We looked at the property. The list price was $2 million. I looked at it. I knew straight away it was worth $2.5 million. And the expectation, talking to the agent, he said, well, the one across the road sold for 2.7, and I said, well, it's a bit better. It's at the nicer reno. And he said, yeah, I agree. So we're expecting it to kind of sell for, a little bit less than that. But, knowing that the guide, is pretty relevant, and lo and behold, the price guide has been increased to 2.2 now, which really means 2.4, with an expectation to sell for 2.5 to 2.6. So, but it's knowing that ahead of the game, so there's no surprises. But I guess coming back to your point, it's really having a feel for where the values are actually at, and what the level of competition is, coupled with the availability of stock, because it still could be a hot market, and it's all relative, right? I mean, Penrith is still pretty hot in certain segments. We're still active there, but we know we can get access to quality listings, and it's not insane in terms of you're having to pay silly prices, because I mean that defeats the purpose. There's no point getting caught up with owner occupiers and just because a lot of owner occupiers will just be at a point where they're just fed up. I've got a friend, he's been searching for a home for 6 months, trying to buy something, and very, very frustrated. So I've kind of been helping him at arm's length, but I really feel for those types of people, but I can understand why you get to a point where you just want it over and you just want to pay whatever you pay as an owner occupier. So we don't want to be competing with that in the sense that getting caught up in paying too much.
Okay, Alex, well, probably time to wrap it up. We've gone over the hour. So summary, and I think you've also got a special offer.
Yeah, absolutely. So the first summary I will say, I'll go through this pretty quick, is that just double check that the market and buying is genuinely as hot as you're led to believe, because the media is saying, again, everything's booming, but quite often you'll find that it's not as hot as you think. So I guess that comes back to the question that was asked, well, maybe, look at some comparable markets. Preparation is absolutely critical. So get your team, know the process, and then just go in there and get it done. But make sure you're not overpaying. ride the coattails of owner-occupier buyers. Again, this is, to me, this is the secret sauce. I think if you can have one takeaway from the presentation, that'd be it. It's a double-edged sword because it means you've got to compete with the hotter segment of the market. But all the examples that, the success stories are the best examples that we have of, clients making money. It's buying in the owner-occupier segment of the market. Thinking laterally, as I said, trying to look at options with a slight twist that maybe get you in the door within that owner-occupier market, but with a slight twist that perhaps owner-occupiers couldn't quite afford or get in because there's a lease or have the appetite for if it's needs renovation. And again, make sure you buy the right property type for the area. And then the sold section of realestate.com is your best friend. Happy to share this presentation as well. If anyone wants it, so feel free to email me. And then the last thing we'll say, so we've got a special discount. If anyone's interested in using our services, we can offer a discount of $500 off our service. So just mention that you watch the webinar and you'll be eligible for the discount. There's our contact details. Please follow Kate on YouTube. Her channel's really, really helpful, I think. So there's a lot of good info on there. And thanks everyone for watching.
Okay, well, thank you. Thank you, Alex. And yes, I urge people to follow up. If you've got further questions, things you'd like to clarify, comments you'd like to make. I'm sorry we didn't get to everyone's questions today, but time has worked against us. But please follow up with the contact details on the screen. Make contact with Alex Dutt at Adviseable, his colleague Kate Hill, and perhaps take advantage of that special discount offer for people who have registered for today's event. So thank you, Alex, for a great presentation. Lots of useful information. For me, one of the key points that you made, amongst the many very pertinent points, was the one about right now I think we're seeing investors not being careful enough in selecting the locations they're targeting and perhaps paying too much relative to local values because it appears cheap compared to where they're currently sitting, which might be somewhere in Sydney or Melbourne. It feels right now as if everywhere's rising, but you need to take that longer term view, make sure you're buying in locations with the drivers for long-term growth. So thank you again, Alex. Please follow up, everyone, with the contact details on the screen if you'd like to find out more or to ask further questions. So this is Terry Ryder from Hotspotting signing off on behalf of myself and Alex Dutt from Adviseable. Bye for now.